Hello my friends and welcome back. Thank you very much for being with me again today. Well, according to this gentleman, we're going to be heading towards the biggest economic crash in the world's history. So let's see what's going on here. I think he's right. This article comes from MoneyWise. It's from September 27th, 2022. And I'm quoting, "Biggest crash in world history. Robert Kiyosaki issues another dire warning and now avoids anything that can be printed. Here are 3 hard assets he likes instead." The market sure looks ugly these days. The S&P 500 is down 23% year to date. For the tech-laden Nasdaq Composite, the loss in 2022 has widened to an even more painful 31%. And I'm quoting Rich Dad Poor Dad author Robert Kiyosaki, who previously sounded the alarm, stresses just how badly this downturn could turn out to be. And I'm quoting, "This is going to be the biggest crash in world history. We've never had this much debt pumped up," end quote, he says in Kitco News interview earlier this month. Given that Kiyosaki has previously tweeted that, and I'm quoting, "crashes are the best times to get rich," end quote, one might think it's time to look for bargains in the beaten down stock market. But that's not what Kiyosaki is doing right now. So, he says, anything that can be printed, like a stock, certificate, a bond, or a dollar, I don't want it, he says. Here's a look at what Kiyosaki prefers instead. Precious metals. Precious metals, particularly gold and silver, have been a popular hedge against inflation and uncertainties. They can't be printed out of thin air like fiat money, and their value is largely unaffected by economic events around the world. To be sure, precious metals aren't immune to the sell-off that's been going on this year. The price of gold is actually down about 9% in 2022, while silver has fallen by nearly 20%. But silver to stay at $20 for 3 to 5 years, then climb to $100 to $500. That's what he says. He says in a recent tweet, now for gold, he points to fellow investing guru Jim Rickards, who once predicted yellow metal to soar to $15,000 an ounce. Right now it's about 1,635 from 1,000 almost 900 at the beginning of the year, until this guy started imposing sanctions on Russian gold. Drop like that. I like his numbers, he said. I think $15,000 is not out of the question for gold, Kiyosaki said. So remember, that would be a jump of 10 times jump up. All right. So Bitcoin is his second option. Some say that Bitcoin is the new gold, while Kiyosaki is a self-proclaimed gold bug. He also likes the world's largest cryptocurrency. Of course, Bitcoin is extremely volatile, so Kiyosaki shares the story of how he got on board during one of the pullbacks. When Bitcoin the first time hit $20,000, I watched it and it tracked back down, he says. So I came back and it hit 6,000, so I knew it was picking up momentum, as a trader would say. And when it hit 6,000, I bought 60. So I'm in the money. So he says that as we know now, Bitcoin then went on to a roller coaster ride, hitting a high of $68,990 in last November. Today, Bitcoin trades at almost $19,000 dollars a piece, a staggering 72 pullback from its peak. But still, we have Kiyosaki's entry price. And the third one is food. Food prices have been going up amid supply shortages around the world. And that's an area investors might want to pay attention to. And then he's obviously using, he says, inflation about to take off. Best investments are cans of tuna and baked beans. Kiyosaki tweeted in June explaining that you can't eat gold, silver or Bitcoin, but you can eat tuna and beans. He said, I invest in Wagyu cattle. He said, people talk about farmland and all that stuff, but I think cattle are great. He said, indeed, investing in farmland has been popular these days. After all, Bill Gates turns out to be the largest private owner of farmland in the US. And even retail investors are now getting in on the action. It might be a little bit more difficult for retail investors to get into cattle, but the payoff can be worth it. You can always eat that thing, Kiyosaki said. Well, so what do you think? The greatest economic crisis in world's history. And he suggests three things, right? Precious metals, and he uses gold and silver, which are down. Then the other thing, he talks about Bitcoin. I don't know how that works. I mean, I know how it works, but I didn't pay attention to have an opinion on that. And then the third one, obviously, is things, material things. I don't know why he did not use, for instance, houses or properties. They will lose their price for a while, they will drop, but then they will come up. Why? Because we want it or we don't want it, people still have sex and have children. It's true that people die as well, but the population, it's not going to go down anytime soon as far as we know. And there's always going to be a place where people want to sleep in, right? They want a house, they want an apartment, they want a place. And I always, I mean, as of now, we know that the demand is higher than the supply. So, and then, as I said, buy tangible things that you can use. If I were, if I would have the money, I would buy, not that I need, but you buy everything that you might think that you might need in the next 10 years. That's what I would do. You need a new lawnmower, I would go and buy it. Do you need a, I don't know, a pair of pliers? I will go and buy it. You need some clothes? I'll go and buy it. I'm going to go and buy some shirts for me. And I'm going to get rid of these ones. I'm going to buy like 50 new ones. So I make sure that they're going to bury me with 3 of them on top and some around me when anyway, because people make fun of me having shirts. Anyway, that's true. So, buy things that you need, need, because the price is gonna just jump. The production is gonna shrink, demand is gonna be higher, and supply will be, as I said, limited. You'll see. I hope we're not gonna see, but all this goes down like this in an accelerated mode. So thank you very much for being with me again today. Stay strong, stay smart, look for the truth, and be just.